The stock market can be one of the most profitable investments you have in your entire life. It can also be one of the most scariest investments, and it gives you the best chance to lose the most money you're ever going to lose in your entire life. Fall back to 2008, many companies folded up and many people lost a lot of money. However, that should not deter you from investing in the stock market. Many people don't understand what the stock market is, and they don't even understand how to get into the stock market or how to start investing. And I'd like to say it's easy when really it's not. I myself have only been investing for a few years, and I still struggle with some of the terms and reading some of the graphs and even understanding some of the fluctuations in many different companies. Which is why I thought it was important to make this video, because as much as I struggle to get through understanding the stock market, I still see a lot of value in investing in the stock market, as some of the stocks I've invested in over the past few years have performed greatly. I have lost some money in the stock market, I will be realistic up front, but the gains have far outdone the losses. And which is why I think it's important for everyone, no matter how much you make, no matter your status, to put some money into some stocks that you feel comfortable with, that you have studied and understood the growth over time and are able to comfortably say, I can leave this money in for a few years. So we're going to start at the top here. What is the stock market? Think of the stock market just like any other regular market. People come to buy and sell, just like any other market. It allows companies like your Apple, Google, or even Microsoft come to the market to trade their shares, allowing individuals like you and me buy a small chunk of a company. Think of it like a whole pizza. Whenever you buy a stock, you're buying a tiny slice of a company, a 0.0001% slice of that company. That's the great thing about owning a stock. You get a sense of partnership, a sense of ownership with the company you're buying. That's the stock market on its own, a market that allows you buy and sell stocks, but it doesn't stop there. Deciding what stocks to buy are usually some of the hardest questions we have on a day-to-day basis. How do I know what stock to buy? How do I know if it's good, if it's bad? How do I know if it's going to fail in a few years? These are questions that a lot of people have with the stock market, and these are things that prevent a lot of people from joining the market early on or even at all. The truth of the matter is, understanding if a company is going to do well or not involves quite a lot of data and quite a lot of studying the market, which the average guy like you or me might not have time for or might not even understand if the data is provided. Here's a simple trick I use to understand if a company is even worth investing in, if a company is going to be profitable. I use a simple trick. I pick out companies that I know, things that I'm familiar with, things that I understand how long they've been in the market and how well they've performed. And I simply Google the company and their stock chart and look at the trends they've had over the past couple years. Take Coca-Cola, for example. If you Google Coca-Cola stocks on Google, you find a chart and you can toggle through to find out their performance over the past 5 years. 5 years ago today, Coca-Cola was trading just about $49, and today they're trading just about $54. On the chart, you can see over time that they've had fluctuations through and through, like most companies will, but you can be sure that they constantly are growing, even at a reduced rate. The second thing I'm looking at for my age is, does the company pay dividend? We're going to go into what dividend is in a different video, but for now, you want stocks that pay dividends, stocks that are going to grow and pay you on a quarterly, biannually basis, something you can benefit from as you grow. Dividends are a good part to picking a stock because you want to ensure that whether the stocks are doing well or not, you're going to get an incentive throughout the course of the year to keep you in line with making profit or growing regardless. The third thing I look out for is how long has the company been in existence. For example, Coca-Cola, they've been around for a very, very long time, and they've been trading for a very, very long time as well. Chances of Coca-Cola being washed out of the market tomorrow are very slim. Now, there are more detailed approaches and detailed ways to looking at the stock market. There are PE ratios and indexes and growth performance graphs, but I'm going to focus on the basics today, on how you can pick out a good stock and how you can pick out a stock that you should get into. Because to be honest, most people aren't going to look at any of this data. That most people are just going to look at Google, look at the charts, look at the trends, and figure out if they've been growing, if they're a good bargain or not, and if they should jump in. Another important part to join in the stock market is You don't want to go with the hype. A lot of people last year, when GameStop was such a big thing, jumped into the market thinking they could profit off GameStop. I personally know a few people who lost a lot of money on GameStop and some people who made quite a good amount of money on GameStop. I didn't join the GameStop hype because I didn't know enough about GameStop to join the market. Their track record wasn't enough for me to understand what the market looked like for them and to join the market if it was going to be a good return. So I stayed away. Sometimes taking a gamble can prove very, very good if you're that kind of guy to just gamble everything on one hatch. You might be profitable, you might make a good return, and most of the time it is a very, very bad idea. You will lose a lot of money, it will be very terrifying, and you're probably never going to jump into the stock market again once that happens. So always pick companies that you have an idea about, you understand your market strategy, you know at least something about, and try to shy away from companies that you have no idea about. That's the way I recommend most people should start investing. Most people should join the stock market. And once you understand how to read the signs and understand how the market goes and all of the trading jargons there are, then you can start to dive into looking at different companies and other companies out there. Another good understanding to stock market trading is the platform you're using to invest. For most people, they don't understand a good portion of their earnings are being taken away when they're buying or selling stocks. Most trading platforms out there or brokerages charge you a good amount. Here in Canada, we have Questrade, all of 5 financial institutions, and other brokerages that help you trade stocks, including Wealthsimple. No matter what country you're in, there has to be a brokerage or a financial institution that can help facilitate buying or selling stocks. A quick Google search in your country would help you figure out what that is. Understanding how much they are charging when you buy and when you sell stocks are a good indicator if you should go with this company or not, because if you're losing a lot of money in your purchase and sales of your stocks, chances are they will be eating away at your earnings potential. The most important rule, I think, about stock market, which no one talks about, is you have to be committed. You have to be in it for the long run. You can't get into the stock market and think, oh, you're going to make $100,000 overnight. If you're going into the stock market, you have to be ready to go the long haul. You have to be putting money away that you're not going to need immediately. You shouldn't be gambling money that you need for immediate action or immediate expenses, because it can prove very detrimental to your future. Most investments grow at a small incremental rate year over year. So just like that, if you invest in the stock market, you have to ensure that you're putting money away that you're not going to need in maybe a year, 2 years, 5 years, to allow that money or to allow the stock market give you the yield that it usually does by growing at a small incremental rate year over year. If you're looking for quick cash, chances are the stock market isn't good for you. Check out the next video. Please remember to subscribe, like, and comment, and let me know if you have any questions, concerns, and I'll be sure to do so and answer them. But for now, I want to say thank you for watching, and I'll see you next time.